All right, good afternoon. Welcome to um, the New York session. I hope everybody is doing well. Okay, let's start with the dollar index as usual. Give me one second. Okay. All right, so we are currently looking at the dollar index, and it's quite interesting how price is behaving since Monday. Right, we've not actually done much in terms of movements. However, the crosses are moving. The majors are also moving. Um, but that's all due to what I have been discussing since last week, based on this big void that we have here. Right, it's gonna be hard for price to go up. Hence, we've only dipped in and then we rejected. Based on what I'm seeing, I wanted them to go and attack previous day's high, which is Friday's high over here. I'm sorry, not Friday. Monday's high over here, and then reject and go lower. But price has failed to do that. Now, based on the current price action, I think we might be going for previous day's low, which is this one here, and then potentially that one. Right, so dollar index, we might be dropping down for today. So we are looking for this level and then this gap as a draw on liquidity. Alright, but once we get down here, maybe there might be a pullback. It's yet to be known, right? It's NFP week, so just be mindful and be cautious. Ultimately, this is where I think they should be coming to, this area here, right? They've engineered equal low, so even if we get some form of a reaction in this area, it might pull back and then take out this equal low. So that's what I'm expecting going forward. But this level is going to be influential, so I'm just going to put it out there. Just be careful when price reaches this level. On the majors, the British pound trade idea is doing very well so far. We've actually achieved our first TP. So we got long on Monday here. Our stop loss is down there, and then the first TP was above this high, which on Monday they got very close to it, right? And then now the rest of the TP, I'm expecting them to go up here and bring out the weekly dividers. Oh, okay, that's not working, is it? I need to take away one of these indicators Okay, let's take this one off. Okay, so this is our target. That's the previous week high. That's where I think price is going. But once we get up here, we will take something off again of that trade, because anything can happen at that level, and then we can continue going up to this level. I would like to see a fair value gap created, so hopefully we will get like a fair value gap created before we get up there. That will give us more confidence that we will get to that level. So this candle's high should stay open, as in the next candle, the next H4 candle should not trade down here. It should stay something like this. Okay, something like this, and then price will leave a gap here. That will give more conviction that we will reach for this and then that one. Okay, so let's see, fingers crossed we get the fair value gap created, and then we expect the price to continue going up. Euro, same thing. I'm expecting them to come for this high. I'm expecting them to come for that high. So let's see how price is gonna behave to get there. We have some weakness on euro pound. That's why this pair is not doing much, but I'm expecting it to continue going up. So again, similar to pound, we want to see a fair value gap being left, and then we can get in. Now, if you can see, right, the reason why I gave the pound as the trade is because euro did not leave any fair value gap down here, right? We don't have any gap down here. When the week closed, right, we didn't have any gap down here, whilst British pound did have this gap. That's why we basically looked for that as the entry. So we want to see a gap formed, and then we can get in to continue going up. Okay, so yeah, euro, wait for a gap to be formed. Let me drop down to 1 hour. Yeah, it's still like inside a bearish range. This high to this low, still inside that, so it's gonna struggle. So probably just deal with the pound and this one here, the New Zealand dollar. I think we'll be reaching for this gap, and then this level, which on the H4 is a breaker. So actually, let's go for this as the target, right? And then the equal high. So after today closes, going into tomorrow, you can look for longs. And it looks like they are creating a market maker buy model. So any down candle that forms, we want them to close above it. Then we can use that down candle as a protection. Okay, so let's wait for one down candle to form. We are aiming for this and that. All right, so let's wait for one down candle to form, then we can basically get an entry to continue going up. The Australian dollar, similar to euro, the New Zealand dollar. If we can close today bullish, then going into tomorrow, I would like to see another bullish candle, aiming for this high. Oops. aiming for that high. So on Australian dollar, that's the current draw on liquidity. Okay, based on the weekly, we are rejecting the previous week low, so we are looking for that previous week high. Let's watch this fair value gap that has been created over here. That gap can give us something in terms of trade ideas. Okay, it can give us something in terms of trade ideas. So, and then I like the down candle over there. Let's see if we can get something maybe during this New York session. Now, if you can start paying attention to New York session, okay, I think that's one of the sessions that ICT actually recommends trading, because it's very forgiving, especially if you have the drawn liquidity. For example, if you know price is reaching for this level, you wait for the New York session, which is let's see. Okay, so price can take out the London session low, which is this one here, and then once it starts rejecting, then you basically look for a buy, and then whatever gap that is being left during the New York session, that gap, you basically use it for continuation to whatever price is going. So if price is going down and it leaves a fair value gap during the New York section, essentially use that. Example, this one, that's a New York session gap. You're gonna use that, all right, for continuation, especially if you're using an Asian pair. It's good for Asian pairs, what I'm showing you here, because if they leave the gap during New York session, then in Asia price will pull back into that, and then it will continue going in that direction. So if you look over here, and this is an up candle being left in Asia, New York, price pulls back here in Asia and then continues going down. Something similar over here, up candle being left in New York, we pull back and then continue going down, right? But you need the draw on liquidity, you need the higher time frame understanding. Without the higher time frame understanding, you will not be able to do it. Okay, so another example is here. We left a gap in New York and then we pull back to it in Asia, and then price shoots up. Same thing here. All right, so and then London session highs and lows are also great for pullback to continue going in the direction of the day. So this is a nice London session low that they can, which at this rate I think that's probably what they can do, come and attack that low and then continue going to the upside. So watch this low here. Once we come and take it out, look for rejection to continue going up towards this high. I think that's all for the majors. For the crosses, I'm interested in the Aussie card and the New Zealand card. I think we've spoke about this, going for this high. So that's a quarterly high. That's the drawn liquidity going forward. And I said wait for one down candle to be closed above, and we have that today. Well, the day has not closed yet, but it's likely going to be like this. So I want us to be looking for potential buy ideas going forward. Our first objective is going to be this fair value gap off here. So that comes in at 0.82676. That's going to be our objective for maybe the week. Because today is Wednesday, we have 2 days to go. So we might reach for this. Probably go beyond that, but that would be an easy target for price to reach for. So tomorrow or even today, if we get any pullback, right, you want to buy to continue going up to that level. I like this candles low, that's the breaker. So that will be exactly where price will want to reach for. All right, so that's that for the New Zealand CAD. The next one will be Aussie CAD. So Aussie CAD is similar. If we get the day to close like this, the drawn liquidity is up here, but we'll be aiming for actually this candle's low, which comes in at 0.90520. All right, that's going to be our drawn liquidity. And I like the fact that we've now left a gap here and then maybe this one as well. You can see that over the course of last week, price did not do none of that. There was no gap left. Any gap that was created was closed through. I think it was just that one, right? So this is good, especially closing above this high with this candle. So this is good. We expect them to continue going higher. I think that's that. Let's go to gold. So gold, I think I spoke about this candle coming, the up candle form. I'm sorry, the down candle forming, right? The reaccumulation. So we want them to dip below this and then continue going up, or continue going up from here. So watch on gold 3130.7, the previous day's low. We might get price to quickly dip into that and then expand up again. All right, it's either they dip into it and then expand up, or it can be a down candle but it will reject the low and then resume going up. So instead of dropping to the lower time frame and trading it, look at it from the high time frame perspective first. All right, and then you can look for basically a trade to continue going up. So with what I've said, this is where you want to be looking for the buy. Don't buy where we are, it's not good. Okay, you want to be buying below this candle low and below. That's where you want to be buying. So that will translate to looking for a move down here and then rejecting and then you buying. It can't go up from here, but you leave yourself exposed to that previous day's low. All right, so yeah, let's see if we can get an entry for this to continue going up. All right, crude oil. So crude oil, I think I spoke about this yesterday. we were going to reject the high and then probably trade inside this and then continue going up. Our protection is this down candle. I was very what's the word, convinced that the up candle, the yesterday's high, this high here, taking out that and then rejecting, I was convinced that it's not going to go up. Why? Because if you look at Monday, we never traded lower, and then Monday went straight up. Tuesday, most of the time, that's how the that's how the market will place in the high of the week. But since we've put a down candle prior to the move up, I don't think that will be the high of the week. We can come back above it. So watch this down candle, and this has given a nice range, so it's good. We can work with this on the lower time frame. So this is your range, and let me drop down to the 1 hour. Okay, so this fair value gap here, watch that, especially at the 618 level. That's where you want to hunt for a buy. And then go back up again. Okay, so we are looking for a buy at the 618 level, and then we continue going up. ES, okay, so they've reached the level that I was anticipating today. Yesterday was very interesting. Remember, I said they were going to come for this high, and we wanted them to drop down into discount before going up. Something interesting happened. I got stopped out, let me be honest, and I couldn't get in for price to go up here because I was expecting them to drop a little bit lower into discount. So if you measure the range, right, so that's the high, that's the low. So I was anticipating them to drop at least to 618 or 70.5, which is where the breaker is, and then reverse and go and attack this high. So when we had this drop during the New York opening or the AM session for ES, I took a sell here to come down and then hunt for a buy to go up. So let me show you how that trade did on the lower time frame, which was not great. Okay, let me go to that 5. 15. Oh, 5. There. This is where I took the sell. So I was selling that fair value gap and then expecting them to drop somewhere here, then buy it back up to come and attack the previous day's high. Now, what was the logic behind me buying? The idea for the day was always going to be a buy. Okay, the idea for the day was always going to be a buy, and I explained the reason. The reason was based on the daily time frame. Based on the daily time frame, we rejected the previous day's low, so today or yesterday was going to attack the previous day's high. However, the level that they're going to use to attack that previous day's high, I was anticipating it here, this fair value gap, right? And it matches up with where the breaker was. So when I sold short, it was a counter trend trade to come here. I was looking for this, then that, but it decided to reverse at the 50% of the range and then started screaming up. So once we broke this high, that's when I got stopped out. Let me show the execution. You can see the execution, right? I showed in this candle. It was a sell limit right here. And then I got stopped out with this candle above that. And then that was it. Now after that, I knew they were going to go for that previous day's high. So I was hunting for a buy, but it never gave me a buy idea. The first level that I was looking for the buy was here. This level. Because it took out this low and then started going up. So I was anticipating them to come here and continue going up. It didn't do it. Then it went up again. This down candle, I placed the buy limit here. This candle's high. It never came. And then it placed this down candle. But at this point, it wasn't good for me to go long because we had the 4 o'clock candle close. So there's always going to be a probability of them maybe pulling back into either this gap or that gap before going up. So I didn't like the idea of buying this down candle to trade up there, and I left it. So not a great day for ES yesterday, but it's all good. And today I'm expecting lower prices because they formed the high of the week, I think. And I like how it's done it, right? Monday, Tuesday, Wednesday, taking out Tuesday's high inside a fair value gap. Their own liquidity is this low here. And then we will go back down to where I was expecting yesterday to go, which is that H4 fair value gap down here. Only problem is entry now, right? Now, I think they'll come here. That candle's low. 5577.75. I think that's where they're gonna come. Now entry. So at 2, wait for a pullback to somewhere here or there. That's a breaker. That's the last down candle prior to previous day's high being taken and then price rejecting. So watch those two levels, especially the fair value gap within, and then you'll be hunting. We'll be hunting for a move to continue going lower. Now, what you can also do is wait for something similar to what I was pointing out to earlier. What is that? Let's drop down to the 15 minutes time frame. You can wait for something like this during the New York session or during the 3 p.m. to 5, between 3 and 5. Wait for something like this to happen. They'll print an up candle and then they move down. Preferably, the up candle takes out a high, either a swing high or just one high, one single high like this, and then the next candle drops. When you see that, then you drop down to the 5 and then sell the fair value gap. So you can sell that, you can sell that, you can sell any of that, as long as price has not got to the target. So I think this is the target. This will be the low hanging fruit target, right? It will get to that one definitely today, this afternoon. But it can also reach for this and continue going down to that one. So if you wait patiently for them to print on a 15-minute chart, one up candle and then a move down, at least printing something like this. Okay, don't sell it like that because it's too risky. Wait for at least one up candle followed by a move down closing below the up candle. Then use that up candle as a protection. Your stop loss can go above that, and then you look for the continuation to the downside. All right. Okay, so that's that for the ES. I'll actually be looking to trade that because I have a session with my student today, so I'll be trading it. That's our draw on liquidity for today. Tomorrow I'll share if I do get a trade on it. Hopefully, because my session is at 3:30 GMT, and hopefully by then we are not below this low. All right, moving on. Yesterday, I think I brought your attention to the dollar yen for continuation to the downside to attack Monday's low. They did pull back and went into that fair value gap here as an entry. Stop loss was above this high and then looking for continuation. And then this afternoon, I was anticipating them to pull back as a New York session pull back into this London session fair value gap and then continue going down. But it didn't happen. So the drawn liquidity on the dollar yen is 148.69. Look for continuation to the downside. Okay. Let's now move on to the crypto world. Let's look at the crypto world. Okay. So crypto world, we have AI16. I think that is a draw on liquidity. It did come to OTE. Now, with the pattern that I was talking about yesterday, OTE is a very crucial area where price can give you some sort of either a reversal to continue going down or it will reaccumulate in there. So I'm not surprised to see that sort of price action. Now, if you understand OTE, optimal trade entry, one of the things that I learned earlier on about OTE was exactly where is it. Okay, where exactly is OTE? Now, your ability to discern the market as a market maker, buy model and sell model is key. You need to understand how to see the market in a buy or sell model. Then you can identify OTE. If you cannot see that pattern, what pattern am I talking about? It looks like this. In a buy, price will accumulate, go up like this. right? Now, if you can identify the market in this format, then you'll be able to identify OTE exactly to the pip sometimes. But if you cannot, then you just have to use the 618 if you want to be conservative, 70.5, sorry, 618 if you want to be aggressive, 70.5 if you want to be conservative, and then 79, yeah, 79 if you want to be, very relaxed because you don't want to get in as early as possible. So mostly these two will get you in, especially the first one, very aggressive entry. So when it's pulling back, you want to aim for this level. That's OTE, optimal trade entry, this level. So if you cannot find it, then you will not be able to get precision for your OTE. So just use 618 to 79 retracement level. Now the reason why the 618 to 79 retracement level works is because most of the time that's where you find this level. All right, so if you cannot find it, then just use the 618 to 79 retracement level. It will be in there somewhere. It's a bit vague, but it will be in there. So if you go back to AI16, right, that's this level here, that level. Okay, that's basically OTE. So when price get there, there's a high probability that price will give a reaction, not a reversal, a reaction. All right, if it's going to reverse, then it will continue going down, and then it will begin to print the same sort of price action it did over here. So it's gonna consolidate, break, distribute, break, distribute, break, and continue going down to attack this low. So as it stands, watch this up candle, because if we break above it, then we are going to continue going up there based on the daily, because the daily has given a big rejection trading through this gap. So I don't think they're gonna come down straight like that. I don't think like, okay, it's possible, but probably not. So how we are going to trade relative to this down candle is key. All right, and also that area right there, that's a reaccumulation area. That's mostly where price would like to reaccumulate again and then continue going up. So this up candles low can be your protection, because if they come back below that, believe me, it will come for these lows. So that's still in the cards to go up here. Solana, I think that is still going to go for this low and that low for now. And that's going to be the draw on liquidity. Bitcoin, yeah, I think it did trade into that. So high of the week potentially forming, and then we coming back for this low and that low. Too clean. We go on the daily. As long as this gap is alive, we will be coming back down. This gap will send price back down here. I think maybe a previous day's high run would be ideal for that continuation to the downside. So wait for a previous day's high to be taken, and then price will come back down. Ethereum, yesterday I was pointing you to this down candle, wait for that to break, then you sell short, right? It couldn't break and then went right up again. Now they've broken this one. So that's it. We're gonna go lower, especially them trading through this New York purple line, Fair Valley gap. It will start going lower. So down. That's what price is gonna do going forward. I like that volume imbalance right in here. Once we traded through it, price has not come above it. It will struggle to go through that small volume imbalance over there. So look for continuation to the downside. Hype. What is the narrative? Okay, I remember now. So same thing. Let me go to the daily, show you this up candle to this down candle, right? On the H4. This is similar to AI16, that up candle that I marked. Where is that? 618 right here, that up candle. So it might reach for this high and then resume going lower. So hype, watch that fair valley gap right here, because that's exactly where 618 is, and then you look for rejecting to come back and attack this low, and then that one. XRP, I think XRP is not doing much. It's just consolidating for now, so I'll leave it unless you want to scalp it, drop down to the lower time frame. But looking at the daily, it's not good, so leave it alone. That's all. Okay, I think I spoke about this. It can give something, but potentially it will come for this low, and then once they take out that low, then you look for maybe a rejection as soon as it goes for that low, because it's taking out previous day's high, so it's gonna take out this low and then that one. So as it stands, watch this low. Once we take it out, anticipate maybe a quick sudden rejection below it, and then touch key. That is the drawn liquidity. Yeah, they're gonna come for this low based on the high time frame. All right, so that is that on the cryptos. I don't think there's much going on the cryptos, but it might get excited. It might get exciting. Yeah, things might get exciting very soon. So there you go. It's looking like we might get the up candle. So watch this one. Okay, watch this one. But you want to see at least is the run above it like this, and then a quick rejection. After that quick rejection, if it closes below it, drop down to the 5 minutes, and then you might see a fair value gap being formed in here. Then you can go short. Going short here is not bad, but the New York session or the AM session can sometimes take out a high before moving lower. If you're not scared, you can do this and then go for that low. If it stops you out, wait for another gap to form, then you do that. Okay, so that's a tip for you before I drop off. And the British pound. Okay, on British pound, pay attention to this gap here. The next H4 candle low can form there. Okay, the next H4, its low can form here and then expand up. So watch that. On the New Zealand CAD, after this high is taken, they might print a down candle. Okay, after this high is taken, they might print a down candle. After that down candle is printed, look for a run below the down candle's low, something like this. This will be a down candle. Look for a run below the candle's low and then a continuation to the upside. Okay, because when it starts going up, it will print down candles, and those down candles low can be a reaccumulation, so like this. So if it shoots up aggressively, the first down candle form, look for the low to be taken and then buy to continue going up. Anytime we shoot up, let me see. Yeah, this is a typical example. Another one here, and then that one. I like the size of the candles. It's very, very huge, right? Big up candles. That's an elephant. Okay, this is a sign some big elephant has stepped in. All right, that will be pretty much it from me for today. Thank you all for joining. I will see you same time tomorrow. Peace.